Hi there. If your CIS business has stopped trading temporarily, knowing when to notify HMRC could help you avoid unnecessary filing issues.
Welcome to Atlas Tax Advisors. For nearly a decade, if you didn't pay any subcontractors in a given month, you didn't have to file a construction industry scheme return. That administrative holiday officially ends in April 2026. This timeline compares the old and new rules. On the top, the pre-2026 logic. 0 payments meant 0 action required. On the bottom, the post-April 2026 reality. If you pay no subcontractors and simply stay silent, HMRC system triggers an automatic financial penalty. This matters specifically for mainstream UK construction contractors who experience gaps in subcontractor work, whether that is due to seasonal weather delays or shifting project types. There is one notable exception. Deemed contractors, businesses outside the construction sector that spend over £3 million on construction, are exempt from this specific monthly nil return mandate, though they remain subject to strict HMRC monitoring. When an inactive month arrives, you now have to actively choose a compliance path. Making the wrong choice, or simply forgetting, has immediate financial consequences. This chart shows the compounding escalation of late filing penalties. If you miss a 0 payment return by 1 day, the system issues an automatic £100 fine. Leave it unresolved for 2 months, and another £200 is stacked onto the total. Reach the 6-month mark, and the fine jumps again, adding another £300, or 5% of your liability, whichever is higher. Because these penalties are system automated, inaction leads to a compounding debt that HMRC is under no obligation to pause. This decision tree shows your options. The first branch is designed for brief 1 to 2 month gaps, manually filing a nil return. This involves submitting a formal return to HMRC by the 19th of the month, declaring that 0 payments were made to subcontractors. The benefit of this method is that it keeps your CIS scheme fully active and compliant without requiring you to call HMRC or formally change your business status. The trade-off is the administrative burden. You place yourself on a monthly cycle where a single memory lapse triggers the automated penalty trap. Filing a nil return provides safety from fines, provided you can maintain absolute consistency every single month. Now let's look at the second path on our flowchart, built for gaps lasting 3 to 6 months, formally requesting an inactivity period from HMRC. To use this tool, you must communicate your request to HMRC before your first missed filing deadline actually occurs. This acts as a pause button. It grants you a half-year holiday from monthly filing, which is useful for extended seasonal slowdowns or when you shift the workload entirely to your internal pay-EY teams. However, this status demands perfect situational awareness across your entire business. If you accidentally file a nil return out of habit or pay a subcontractor just once without notifying HMRC first, the scheme instantly reactivates. You are then exposed to penalties on the very next missed cycle. The inactivity notification reduces monthly admin, but its strict internal logic makes it fragile to miscommunication within your team. Finally, let's examine the third branch on our flowchart, shifting business to qualifying public bodies under the new Regulation 24ZA. Starting in April 2026, payments from specific entities like local authorities and public schools are removed from the scope of the construction industry scheme. You receive these payments gross. By eliminating the standard 20% or 30% tax retention, you get your full pay immediately, which directly improves cash flow. This requires the segregation of your revenue streams. Processing a private commercial invoice through this same workflow without applying the required deductions is a severe compliance breach. Regulation 24ZA secures your full payment upfront, provided you maintain the accounting hygiene needed to keep public and private revenue streams separate. Sometimes mistakes happen. You might check your account and discover late penalties have stacked up because your team assumed an inactivity period was in place when it wasn't. If that occurs, you have a 30-day window to force an appeal through the formal HMRC process. You must prove you had a reasonable excuse. This means providing evidence like medical records from a hospital stay or documented proof of a verified HMRC online system outage. General operational excuses like "I was too busy," "the project ran long," or "I forgot" are rejected by the system. Because the appeals process demands so much documentation, fighting a penalty takes significantly more effort than simply filing the correct return in the first place. This matrix maps your choices. For 1 to 2 month gaps, stick to the nil return to build a filing habit. For seasonal closures, use the 6-month inactivity notification. Just set a month 5 reminder. And for public contracts, leverage the Regulation 24ZA exemption, carefully ring-fencing that revenue. Compliance in the 2026 regime depends on matching the specific administrative tool to your current project pipeline. The new 2026 CIS regime aggressively punishes passivity, but these compounding penalties are completely preventable when you operate a proactive system. Before these changes go live in April 2026, contact the team at Atlas Tax Advisors. We can help audit and bulletproof your CIS workflows so you are prepared. Please note, this video is for educational purposes only and does not constitute formal tax or legal advice. Always consult qualified professionals like the team at Atlas Tax Advisors regarding your specific financial circumstances.